Here's the thing, ladies and gentlemen. You ask and you shall receive, okay? I ask what stocks you want me to do an analysis of. Here, great guy here. Screw college. I mean, I agree with you. Not like I just graduated or anything with a bachelor's, but that's okay. I agree, college sucks. But we're going to talk about Amazon today. Amazon stocks. It's our one we picked, okay? Obviously, some other options on there we'll be going over. So let's look at Amazon stock, right? Obviously, as we do with all of these, we'll have a price target at the end for you, as well as some rationale behind that price target. I don't just do random numbers. I do some calculations here, okay? I'm a math guy, so we do the calculations here and find out what's going on. So let's get into Amazon. Obviously, good thing to overview first when you're looking at a company is just what the stock's performance looks like. And obviously, you see year to date up 16% year to date. Not too crazy, but actually decent performance, all things considered. Over the last 5 years, the stock's up 405%, which is quite incredible return over the last 5 years. I mean, we're talking about annualized growth rate of 80%, which is pretty crazy. So let's go ahead and see what else we got. When we're looking at the stock, we like to look at, well, what the company is. That's, I think, your next step. You got to understand what the company is. So Amazon, I think we all know Amazon. Come on now. Obviously, the largest online retailer in the world. Obviously, no shocker about that. Everyone knows the name Amazon for many different reasons, but for the most part, you know about their platform for purchasing goods. I mean, okay, can't show that one on YouTube. There's an inappropriate thing there. But everything you could possibly imagine gets sold on Amazon from buyers and sellers of various varieties. Okay, so that's Amazon. I think it's a pretty no nonsense idea what the company is. One thing you need to understand: there's a lot more to Amazon than just Amazon, right? So this is a company that encompasses. Obviously, Amazon Prime being this main subscription service, Amazon Web Services being their cloud platform, obviously their app store, Kindle, number one source for ebooks, I would say. Obviously, an alternative to really any other thing besides physical books. Obviously, you can store all your books on your Kindle in your massive library of books that you might have that you purchase via Amazon subscriptions. But obviously, you have devices from Amazon Echo to Amazon Fire tablets to Amazon Fire TV, which is just a source of making your TV a smart TV. Very good stuff. Obviously, you have Amazon Music. You have the game store, as well as good stuff. Amazon Studios. I mean, this is great. Obviously, there's a lot to go with. Amazon. A lot of subsidiaries with them as well. And with those, obviously, I listed some of the most influential companies that they own. Number one, obviously, being Whole Foods. Huge retailer in the healthy food space. Obviously, they don't necessarily give out revenue numbers anymore because of the fact that they've combined it now with their revenue number, so it's a little bit different. But obviously, it's a trend that Whole Foods it's something that I believe in the future will be growing, just due to the fact that we've seen a trend more towards organic and organic produce and other grocery items. Organic's kind of been taken over. A lot of people are into that lately. So you got that, and really my other main Zappos. They got shoes. If you ever owned a pair, I haven't personally, so I don't necessarily know about it. But then obviously you own Twitch. Twitch is something they acquired back in 2014, which is crazy to think about. But this is one crazy thing. If you don't know about Twitch, I think most people do, but it's a live streaming website that's really gone bonkers in terms of viewership. Even on their website, thankfully they give this data out. You can just look at twitchtracker.com. Look at all this great stuff from 2013 onward. This will show you obviously max viewers being the lightest green, lightest cyan, and then average viewers being this dark green right here. Blue, cyan, what do you want to call it? Call it whatever you want, okay? Aquamarine, maybe. Could be aquamarine. Let's be clear. But look at the viewership trend is crazy. And obviously, if we bring in month-over-month growth here, you see great stuff. I mean, consistently in the green pretty well. Sometimes by great margins, but usually over 10%. a lot of growth. A lot of growth coming here. There's a lot of good stuff. Average concurrent viewers. That's a great number to look at just in terms of this line graph here. Yeah, and channels obviously going up as more people move to Twitch as a streaming platform. I think it's crazy. I think it's crazy some of the numbers they're able to do. So just keep an eye on that. I mean, this is a great source for them, even though it's not the main bringer of revenue. It's one great aspect for them, right? And on top of that, they've just agreed now, and if it goes through, we'll see, to purchase MGM Holdings, which is pretty crazy. I mean, you might know MGM is one of the biggest film and TV content providers. This is not the gambling places, not the casinos. This is MGM in terms of the studios. You know, from the little tiger intro, you got to know the tiger guy, okay? So this adds a lot more into their Amazon Video service, which is crazy. Obviously, some more exclusives that they can add due to this acquisition. If it goes through, we'll see. But I believe it will for sure. So that's Amazon as a whole for you. Let's look at some of the bases of the stock here, right? So obviously, we like looking at the details here. Let's look at some of the finer details. Trading a market cap right now of $1.88 trillion is pretty darn crazy. You think about this, a couple years ago we had no companies even over $1 trillion in market cap in history. And then now you've got, 6 big ones that have reached that point, and almost nearing on $2 trillion in market cap is seemingly crazy. PE ratio has never been something great for this company, right? This is a company that traditionally earnings haven't quite, profitability hasn't necessarily been the standpoint for them, and they've changed that quite a bit. You can see really even just back in middle of 2020 how much higher that PE ratio was, and where it's fallen to now is pretty crazy. But this is a number I think is quite spectacular. Price to expected growth only at 1.5, not that crazy. You'd expect a much higher number given these other valuation metrics, but it's not that crazy, all things considered. Revenue numbers, I mean, you're going to be hard-pressed to find a company that does it better than Amazon. You look over the last 4 years, 2018, $232 billion, 2019, $280 billion, then up to 2020, $386 billion, which is a crazy year. Last year skyrocketed this business more than anything could. This, obviously, we were going to a form of e-commerce in the future by far. I mean, e-commerce was going to take over. We all knew this, okay? This isn't a shocking thing. But last year skyrocketed it to exponential degrees, and it's not like it's a trend that's going to go away. This is a trend that's going to stay. There are pants on, by the way, in case you saw my naked knee. There's shorts on here, okay? But this is not a trend that's going away by any means. So you got to be honest here. This is a company in really a transformative market that is not going away. You got to know what market they're in. It's e-commerce, right? They're not going away anytime soon. Not only that, there's revenue split up in many different ways. Obviously, as I mentioned, there was Amazon Web Services being part of it as well. If you don't know Amazon Web Services, well, it's one of the fastest growing cloud platforms out there. Currently, last quarter they delivered $13.5 billion in revenue, which is great stuff. Growth of 32%. Quarter over quarter. That's just quarter over quarter, but or year over year, I should say. But still, fantastic pace here. Over 30% growth rate on that is quite incredible. So, really good stuff. Let's look at some of the fine details as we like to do. I'm a finance guy, so I love looking at a balance sheet. So this is a company that currently has 323. I think it's in millions. Yep, $323 billion in total assets, and that's all things considered pretty darn spanking nice, because honestly, there's not an incredible amount of long-term debt here. $53 billion, not crazy. Stockholder equity of $103 billion. That's a lot of extra cash on this balance sheet for a company that hasn't necessarily been, I will say 100% hasn't been necessarily focusing on net income. As of late, though, we've seen some great stuff. Net income on this company is taken off to an exponential degree as of last year. Obviously, the increase in revenue certainly helped. But a lot of companies struggled last year in net income, and this is a company that has taken that opportunity and absolutely just smashed it out of the park. I mean, that's great numbers. I don't think anyone can deny that. And as you see that grow, this is a company that has such a great profitability model, not only with the services segment of them, a lot of different services they provide. Amazon Web Services have a huge impact in terms of profitability, could be an immensely profitable target in their main core business. The more they sell, I think the more they can easily turn that into revenue. And obviously Twitch revenue from advertisements as ad rates continue to grow now, where they fell last year. So a lot of great stuff going for this company. Now you see all that, and it's all fine and dandy, and we're talking about the good stuff here, right? But it's worth mentioning the negatives. I always want to point out the negatives. What's the main negative here? Well, I really only think there's one main negative here. I think it's that we've got a very unfortunate situation right now brewing in the United States, and that is, unfortunately, we've got a relatively un-American process going on here known as breaking up companies, right? Regulation. So it's pretty unfortunate, but pretty well Joe Biden here has announced a new executive order that's targeting antitrust behaviors. Now, what they view as antitrust behaviors are a little bit different from myself. They view pretty much anything that, a large company that's kind of earned their way to be monopolistic. There's nothing saying no one else can get in the game. There's a lot of other people in the game that Amazon's into, whether it be from the Whole Foods segment, whether it be from, this is just a diversified company. It's not necessarily one that is overstepping any antitrust boundaries, because there's so many other platforms for selling products online, and there's so many other successful platforms too. Everyone has the chance to be in the e-commerce game, and a lot of people are, and they're very successful at it. You've seen the numbers that Wayfair put up last year. You see the numbers that Etsy put up last year. They're incredible. So it's not necessarily fair that we are targeting big tech companies like Apple, which is not a monopoly, by the way, by any means. Amazon, House lawmakers have floated the idea of forcing Amazon to split into two companies. Now, that's the issue right now with where we're at as a country. Government has no clue what they're talking about. Unfortunately, none of these politicians have any idea what they're talking about. A lot of them come from pretty privileged lives. They don't understand how business works. They haven't had to work for anything in their lives. Now, someone like Jeff Bezos, who built this company from the ground up, doesn't see any antitrust issues here. The MGM acquisition, I could see it getting denied, mostly because of the fact that they don't want them to become too large of a company. I think that's kind of a garbage reasoning. There's no reason why these companies should have to split. I'm just going to throw it out there right now. I don't think necessarily anything will happen to where they do split that. I don't think so. I really think so that this is not going to happen, obviously. I don't know. I think just right now there's some doofuses in Congress, and there always has been, but I think it's worse than ever now. People they seek for regulation. I don't know. I think it's completely anti-capitalistic what they're doing, and they don't understand really that's kind of what made us where we're at today. But, oh well, that's for another day. Let's get into these price targets. Forget about this. You got to mention the bad news, though. It's worth mentioning, as much as it makes me upset sometimes that some of these dumb politicians don't have a clue what they're talking about, right? How about you work for a living? I would love to see that. Instead, you don't work more than a day out of the year. Come on now, we know this. Here's some price targets, okay? We're just throwing it out there. We're just going to be blatant with it. Here's my 1 year and 5 year targets. 1 year, I'm giving this thing, we got a high, my personal target, medium around the road there, and a low. High target here is 4,200 by the end of the year. Now, obviously the stock's sitting at 3,700, so getting up by that amount, we're talking about another 15% move upward, which I think would be crazy off of the already 16%, mostly because I think there's still, and as you can see in the last few months, there's been a lot of stagnation. Let's look year to date. Sorry. But really, there was a good stagnation period over the last 3 months that just recently took off, thankfully, here in July for them. But I think overall, we're headed for a little bit of a period of stagnation as the whole market. And if you hear negative news like this, it'll lead these stocks to just trade pretty flat. But still, 4,200, pretty decent gain there. 4,000 is my personal target. Pretty good high upward movement. We're talking about a 300, or really right around a 10% gain from where it's at, up around $300. We'll see what that looks like. I think it's possible by all means. I think it's possible. And a low target of 3,800. Now that would be worst case scenario. I don't think the stock's going down this year. No chance. I think it still has upward movement, even in the worst case scenario for me this year. My worst case scenario is not to include any breakup because I don't think that's going to happen. I think it's just completely ridiculous. The fears are ridiculous, and it's not going to happen. My 5-year target, things get a little more interesting here, okay? My 5-year target, my high here is $7,000, and some people might think that's a little crazy, not necessarily being high enough, right? This is talking about a stock that's going to double in a 5-year standpoint, which seems pretty crazy. This represents a 14% compound annualized growth rate each year, right around 14%, and it'll put it at a $3.5 trillion market cap. Now that's the high estimate there, and I think it could be higher than that. I really do, because the high really includes everything going well for it. I just personally think valuation-wise, this will be where it ends up in terms of the market cap. I don't think that's necessarily where it deserves to be, but given revenue growth in the past, $3.5 trillion market cap is going to be pretty cheap in 5 years, in my opinion. I just think that's where it's going to end up due to fear of regulatory impact, everything like that. My personal target is putting it at $5,500. So it's a $2.77 trillion market cap. Its growth from where it's at right now, around an extra trillion in terms of market cap growth. Not that much growth in terms of stock price, all things considered. We're talking about a 10% annualized growth rate at this point, which is not that much, right? 10% compound annualized growth for a stock like this, it's pretty weak compared to the historical 5 years. My opinion is I think it's going to do great numbers, but again, I talk about there is a point where these companies will slow down. Now, this is an incredibly dominant company, and it will not slow down in terms of revenue growth, in my opinion, for quite a while. But once that revenue growth starts to slip, the stock price starts to grow lesser as well, because the big hedge fund investors decide this isn't the high growth. Right now, it's a very high growth market, okay? High growth companies, regardless of profitability levels, where this company is printing money hand over fist here in the next 5 years, but still. My low target here being 4,000. No chance this comes to pass, but this is if there are continued talks of regulation, if there are court cases, there's no way it's going to be $4,000, okay? No way. That would be the greatest injustice in the entire market if it were to do that. I mean, that's 2% each year. Not happening, but I could see a lot higher growth than this, but just based off the fact that this is already $3.5 trillion market cap, think about it. I do think this is a company that by that high estimate there, by really in 5 years, this company most likely will be doing around, hear me out, maybe seeming crazy, but $600 billion in revenue by then would be insane. I think it's fully possible, and that really there is adjusting to around 5 to 6 times the value. And based off just the size of the company, 5 to 6 times the value, I think would be pretty fair value for it. So that's what I got for you in terms of Amazon stock. Hope you enjoyed that. If you have any other opinions, leave them in the comments, please. I'd love to hear about it. Hope you have a good one.